Welcome back to Primary Source China Investment. This week we're on show Y6, and we're talking about China equities, but we're looking at it from the angle of some fundamental analysis and performance and asking some questions about why that is. So we keep hearing that Chinese manufacturing miracle is coming to a town near you. And the cover of The Economist this week was saying all of these Chinese companies are coming. They're bringing great products at great prices. And surely there must be some way to profit from all of this, right? Well, unfortunately, the stock market and the individual names have been nothing but pain. The largest companies traded in China, so-called A shares, have been a pain trade for years now. There is also no way to blame foreigners or the West holding China back. These are largely Chinese companies for Chinese consumers. The only company trading at an all-time high in the top 10 names in the CSI 300 is Yangtze Power. And that's certainly a defensive play. But the percentage off the all-time high is massive. And these are all profitable, well-entrenched, large cap companies. Remember, the CSI 300 is the large cap index of China. But it's not only A shares. I asked a few friends of mine at an event to, quote, name a Chinese company. And, you know, the usual suspects, Alibaba, Tencent, a number of people said Temu, which is really Pinduoduo as the parent, NetEase, Jingdong, Xiaomi, Huawei, and Shein. Well, two of those are private, so we don't really know how they're doing. But the rest of them are all down, anywhere from 25 to 75%. So, Pengguo, what's happening? What's going on? These are big companies.
Yeah, that's many reasons behind that. But two obvious reason is, firstly, China is a manufacturing country. So, but a lot of the product is in the middle and low end. As really most for the entire the chain, like the phone, you can deposit to see where the profit came from, and then, but it's pretty clear to say most profit just is really to the foreign companies. But for the domestic companies, their profit margin is pretty low. That is a big problem. There's a few products to the high end, not good enough to support the Asia market. And right now, especially in the global recessions, global demand get reduced. So that means, but from the manufacturer perspective, the cost get increased, and profit still get squeezed from many different places. So that's one word that is popular in China is 卷. Reflected to the Asia market, you will see very few companies can pay the dividends. So
Right.
that's the big problem.
But they can't. What's interesting to me is we're looking always at this fundamentally, and maybe fundamental analysis just doesn't work anymore because, you know, these are profitable. Look at BYD, right? BYD is killing it, but it doesn't reflect in the stock, which could mean a couple of things. A, there's a huge run up when these companies become popular, and investors front run it, and then the reality sets in. Or B, the profits that the companies make don't accrue to the shareholders, like you said about dividend payment. I mean, BYD is in the press every day. Just this morning, I'm reading that they're coming to Canada. So this company is growing leaps and bounds, but the stock performance is abysmal. So it could be fundamental analysis doesn't work, or profits don't accrue to the shareholders, or these companies continue to reinvest in the business. That might make a lot of sense for growing companies, or they invest in expansion, or like Alibaba, they launch other companies that don't accrue to the shareholders. So I'm a little cynical about this because of some of the past maneuvers, but companies that like big banks and big power companies, these companies make big money, hire a lot, employ a lot, and continue to grow. It just doesn't get reflected in the stock price.
Yeah, I fully understand that's a pain. Like the BYD. So generally, as speaking, this is the largest and the best companies in the China market. Unfortunately, the clean energy area is always in the price war. And most of the time, and most recently, BYD started the price war. So in these situations, it's very hard to make the consistent profit. It's more like the fight each other with other companies. So that is hurt the entire industry. Obviously, reflect the market. Fundamental analysis definitely works, and it really depends on people how they interpret the data and build the model. And also state companies, so people always blame them a monopoly or some things, but you can say they still can pay the dividend. They have the decent profit to support their business.
Yeah, I was just pulling up a chart. So I don't want to mislead people. BYD in May of 2020 was an $8 stock. So it went from 8 to 50, right? So that's massive growth, 8 to 50. And it did that, in 14 months. It went from 8 to 50. But now, the stock is 32. I don't want to mislead people. I do believe a lot of money goes in very quickly when something good news breaks or a new product comes out, and there's a lot of momentum behind the stock. Investors rush in. We all understand the retail aspect of, trying to catch the next wave of something. And then it comes the bust shortly after that. And a lot of these stocks have experienced that. Not necessarily the big banks or the big power companies, but certainly the big battery maker, BYD, this kind of new technology and new industry has really been this boom and bust in terms of the stock price. That doesn't mean that the demand for the product has gone away, but the stock price performance has not been great.
Yeah, so BYD definitely is a leader for the clean energy car. Unfortunately, I think it's more tied to the entire Asia market. So in current situations, as we know, like the sector or macro risk take much higher percentages than in the entire risk for the individual companies, especially in the emerging market. So all the behaviors is also related to behavior finance. So China definitely is developing countries.
Yeah, the behavioral
So
finance aspect
behavior
is a good way to
to pump
describe
up
this.
super high very quickly.
Yeah. Another company in this top 10 on the CSI 300 is Medea, right? It's traded in Shenzhen. Again, went from 5 to 15, back to 8. And, this kind of volatility over, this few year time, that's painful. And it goes back to your point where competition is fierce. I mean, Medea is a long-term, it's been around for a long, long time in China. It's retail store, and then also they're into the manufacturing end of the business. So they are a fully integrated manufacturer distributor, and they struggle with price because the competition is so fierce. I think a lot of people underestimate the competition, even for these big brand names, these big Chinese
Exactly right.
brands.
Yeah, especially about the price.
Yeah, and Temu, which is basically killing it across the globe, owned by Pinduoduo, that stock has had a rough patch too. So I think the message we want to send is, just because you hear a company's name, just because it's doing well, doesn't necessarily mean the stock does well. And I think that's the caution for the message today. Anything else to finish with, Pengguo?
Yeah, and most of the important fundamental analysis to figure out the sustainable growth. That's the key.
Well, I hope you're right. I hope fundamental analysis still works. And with that, we're going to leave it with show Y6. Thanks for tuning in. We'll see you next week.
Thank you.